This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So today on the show, I have Steve Brechtel, and Steve and I met through another podcast that I did with Brad Rathie, and Brad, a really cool conversation with Brad, and Brad had seen quite a bit over the years in the industry, and so Steve and I connected up through Brad, and Steve has got a really interesting background, and it's 20 years as a derivatives trader for three of the top largest funds, frankly, the top 100 funds, and we're ranging from Tewksbury Capital, which used to be Trout Trading, Monroe Trout, the New Market Wizards book. I think people recognize that. Crabel Capital, and to Two Sigma. And I actually spent some time with Toby Crabel down in the Virgin Islands years back. Had a chance to spend an afternoon with him, so really interesting. Steve, thank you for joining me.
Thank you. Thanks for having me.
So let's jump right into the most important thing. You went to William & Mary. My mother and sister went there. You did go there, right?
I did go there, yes.
So, but the most important thing would be on, I guess, 64 Pierce's Barbecue. And if you don't know it, then I'm not really sure you went to William & Mary.
Well, I never really was the barbecue kind of guy. Probably stayed in too many frat parties at the time.
Anyways, it's like right there at the pull-off of for William & Mary. That was whenever I was going down to the Outer Banks or something, it was like the must stop pretty much right there at the William & Mary exit.
Yeah, now you're ringing a bell. I lived in the Outer Banks for a year, so that sounds familiar.
Yeah. So, well, listen, so where'd you grow up?
I grew up in New York, Connecticut, went to high school in Virginia, and then I went into William & Mary.
Gotcha. Where'd you go to high school in Virginia? What area of Virginia?
Winchester.
Winchester, okay.
Yeah.
I grew up in the Vienna, Virginia area, so about 60 minutes away.
Yeah, Nova. Yeah, we always talked about you guys like you were a whole different universe.
Well, you know, amazingly, Northern Virginia and the rest of Virginia is two different things. People don't realize it, but anybody that's been in the state realizes it. It's this little enclave up there near D.C. is completely different than the rest of the state.
Yep.
So tell me about, you're at William & Mary, and obviously now looking back over 20 years, and we'll talk about this, you've had these really interesting experiences at three funds. What were you thinking in college? Like, what was the goal?
Well, Michael, the first thing I want to say is that this wasn't supposed to happen.
What wasn't supposed to happen?
The last 20 years.
Oh, okay.
Not the way I had it designed, at least when I was 20. I was an English major. I was writing plays. I went off to University of London. And I was basically looking at the route of a starving writer for the rest of my life. And something clicked senior year where all of a sudden I realized I like sushi and I like steak. I like skiing. And these things all cost money. So my roommate at the time, who's still at Tewksbury now, he had just done an interview with a stockbroker job in Virginia Beach. So while I was still in my senior year, I went over to this stockbroker interview, and it was 6 hours long. And when it was over, I puked in the parking lot. And I was like, wow, that sounds pretty cool, doing something like this. But it was intense. And that just kind of put the seed in my mind that I'd like to get involved in something like this.
Now you kind of beeped out a little bit there. Did you mention a name to where you were interviewed after you puked in the parking lot?
No, I didn't mention any names.
Okay. I just wanted to make sure. There was kind of a beep there, so I wasn't sure whether we had lost you.
Oh, sorry.
No. Sometimes Skype is fickle. I just run with the punches on it.
Right.
Okay. Well, lead me through. So when, obviously you was your first gig at Trout.
No, I went straight into sales. At the time, I went to work for Pitney Bowes. So at the time, salespeople selling office equipment were making good money. And even though I was an English major with this playwriting background, the one trait that I seemed to grasp onto was just make money, doing whatever, as long as it was legal. So I went to Pitney Bowes. I worked there for a couple of years. Then I went to work for Union Labor Life Insurance in D.C. I was a market analyst there. And I was kind of bored in that job. And that was in the D.C. area. So I took a night job working a Pizza Hut manager. So 6 nights a week, I was moonlighting as the Pizza Hut manager for 2 years while, wearing my suit job that I went to college for, doing insurance. So while all this was going on, my friends from William & Mary were had started up this CTA with Monroe Trout. Monroe Trout's brother, Tim Trout, was a good friend of mine my senior year. And looking back, that was a crucial year to make friends with him. And they needed some bodies on the desk. So I interviewed with Monroe, and I'll never forget, I got this offer while I was still at the insurance company, and it was 7 parts with all these kick-in bonuses and an exclusive fitness club membership, and it said, Mr. Brechtel will work the Asian trading hours, no less than 10 hours per day, sitting at his desk, having lunch at his desk, and starting at 4 p.m. Central and working through till, I think it was like 2 a.m., 3 a.m., and I was like, wow, is that all we have to do? Sweet,
How old were you and what year was this?
This was 92. I was 24, I believe, 24, 25.
And this was going to be in Bermuda?
No, this was in Chicago.
Okay.
So, so I went from working 2 jobs to 1 job, and it just seemed a lot easier it was a good transition, I guess, from what I had been doing the prior 2 years to that.
Now, let me ask, though, because I think you've mentioned something, and you kind of, as a lot of entrepreneurs do, they kind of just push it on by because they don't think it's that important. I know it's important, but you mentioned this variety of jobs, and you were willing to make money as long as it was legal, and so you were essentially agnostic to how you could make the money, whether it was Pitney Bowes or pizza. And so the ability to be open, speak to that, the fact that you were open. And even though you had a chance to know Tim Trout, the being open part, I have a feeling, was as important as anything, because other people might hear that and just like, whatever. Well,
yeah. I remember a lot of friends were going to law school, friends of mine that were English majors and history majors. And it just seemed like I used to say at the time, they were prolonging their misery, because I knew a lot of these people weren't going to be lawyers. And, the people that know when they're 16 years old or 18 that they want to go into a specific discipline or field, I was always jealous of them at that time, because I didn't have that kind of, pre-knowledge going into school, nor when I was in school. So when I got out, I was open, and that allowed me to make some risky maneuvers. When I told my parents that I was going to go work for a company in Chicago trading futures, that was like the worst thing my mother ever heard at the time.
I should add something here, because I know we kind of talked about it. And I've had a chance to sit down with the heads of many large CTAs over the years, guys that would be Monroe Trout's peers in many ways. However, it's not typical. It's not typical for folks in your position to get the chance to share and have a conversation. Usually there is it's one thing to be talking to the head cheese, and he offers some insights about how he came along and stuff, but it's a fairly secretive industry. There are certain liabilities that go along with things. So I think it's interesting, and it's nice that you were able to kind of get clearance to have this conversation. So I think that's unique. I appreciate that.
I appreciate it from my company as well, Two Sigma.
So, but let me get back. So I don't want to go off too much on a tangent, but I just want to at least kind of outline that. So you are in this process, and you are now working execution Asian desk with Monroe Trout.
Correct. Yeah. In fact, when I left the insurance company, people said, "Oh, are you going to go into the pits?" And I didn't exactly know what I was going to be doing, but I knew I wasn't going into the pits. I said, "No, it's something to do with the phones." And they said, "Oh, you're probably going to be on the phone right outside the pit." And of course, this was part of the fact that I was in D.C., where DC is different than Chicago or New York. In Chicago or New York, you can't seem to meet anybody that doesn't have or at least at the time, probably still today, doesn't have a cousin or an uncle or a brother, father, somebody that's in this business. So in DC, there was, including myself, we had no idea what I was exactly getting into. And then I showed up in Chicago, and it was funny because first 5 minutes on the job, I was handed a phone and I was already trading. I mean, live trading. I had no idea what I was doing.
Okay, why did Trout hire you? I mean, you're fairly inexperienced, or at least let's make a differential here between.
I don't take any offense to it.
No. Let's make a differential between inexperience in the trading world and being a bright, capable guy who's got some ambition. Because I'm going to guess that that's what Trout was looking for more than experience.
Right. Correct. Yeah. We used to joke at the time that Monroe couldn't find anyone from his Harvard days to do any lowly commodity trading, so he hired a bunch of Tim, his brother's friends from William and Mary, instead. There's probably some truth to that. That would be the first thing. The second would be probably just an ethic or a willingness to sit in a chair, for so many hours and not move. Going to the bathroom is a luxury often. And then I think most important was probably the fact that there was a blank slate. There was no preconceived notions about trading. He could just completely mold us. And this probably comes along the lines of what you were talking with Brad about the turtles. I wouldn't argue when they told me that this is what we do in this situation. I would just do it. On top of that, just being trustworthy, good with numbers, and to be a multitasker. I mean, you're constantly reprioritizing on the fly. You can't just wake up and say, here's how my day's going to go. You can wake up and think your day is going to go one way, and it's completely the opposite, and that's usually the case. So you have to be very flexible. Reminds me of my Pizza Hut days, actually, where you're multitasking constantly and you're remembering 3 or 4 pizza orders before you can get it in the computer.
Beyond any contractual obligations that you have, and a man being your position with 3 of the top 100 funds in the last 20 years, you've probably signed more documents than you care to remember to keep company secrets. But without giving away anything, what would be some of the big picture lessons that you learned early on at Trout that perhaps even to this day, the average person, maybe they've heard, but they really don't understand the importance of?
Right. First off, keep your emotions intact. I always remember the Bugs Bunny cartoon, I'll be scared later. I'm too mad right now. Well, in this case, I'll get mad later. You don't want to jeopardize the current trade by getting upset. That was always and still is the main part of your job. I deal a lot with computers. I have 12 computer screens surrounding me, and possibly will be 16 soon. And you're constantly having, the computers are technology. We have problems from time to time. So you can't, those are the things that usually get me most upset, not the actual markets moving around. So just keeping your emotions intact as problems arise. Another thing that holds true today still is prioritizing. Many big trades often happen at once. In fact, when I was in my Trout days, I remember we used to call it the money booth, because you felt like you were in a money booth, dollar bills flying around, and you're just trying to catch them all as soon as you can. A lot of beepers going off, and literally like 5 hours will go by, and you don't even realize 5 hours went by. You look up and you say, "Oh my God, I haven't moved from this position." Your neck's a little sore or whatever. And then from a more systematic point of view, just normalizing risk. That includes maybe developing like a sector equivalence based on a bellwether instrument for that sector, vol adjusted, not just looking at notional, but accounting for vol, whether that's using an average true range or an average range, but at least normalizing all your trading. So so many natural gas is equal to so many crude, when you're hedged and when you're not hedged.
So big picture, when were you, you've thrown into the fire. Obviously, I don't think you knew you were hooked until after you were thrown into the fire. So once you're thrown in, when were you hooked? What was the tipping point?
Yeah, this is one of these fun conversations. Actually, I like that question. I was hooked when I was working the U.S. shift at first, before I went on to Asia, where I've been for most of the 20 years. And I would call up, and you'd place a few orders. Now, when you called up down to the pit, it might be really quiet, and you place a few orders, and they kind of build in tempo. And next thing you know, it sounds like there's a riot down there. And you feel like, in fact, often you were the one who caused this riot. And I'd come home and tell my wife, I'd say, I think I just caused this craziness in the pit, that stuff you see on TV. That was a phone call that I made earlier. It wasn't my trade. I didn't come up with the idea, but I'm the one who got to do that. So I felt, very much part of that. The other time I realized I was hooked is it didn't sink in at first with the size we were doing at the time, but I realized that I was trading, currencies, yen, D-marks at the time. And the D-mark would have a, pronounced move overnight, and I was a big part of the trades going there, calling every broker I know and putting on this whopper. And then I'd go to bed and I'd say, you know what, I think the people in Europe are waking up, and I think this trading that we just did is going to affect their exchange rate, around the world, but, especially in Germany or Europe. That's when it hit me that, we're not just playing pie in the sky kind of game here. This is actually real world stuff.
Well, let's jump into that, because let's let you, to the extent that you're able. I know you wanted to cover 6 strategies that maybe people could glean some insight from what you were exposed to over the years. And I should add a caveat here, because I didn't do it from the beginning. People that are familiar with this world and familiar with some of the names are going to know that Monroe Trout, Toby Crabel, we're talking short-term systematic traders. We're not talking the trend following variety that I've written about so much. So why don't I let you go ahead though? And like I love the diversity of doing these podcasts. I think it's great just to get so many different insights from different people. Because even if you use a different technique, generally the big picture philosophical foundational issues, like you were talking about emotions and normalizing risk, those transfer across whatever strategy you choose. But let me let you go ahead and jump in, because I know you did want to elaborate on 6 strategies you thought people might find interesting.
Yeah, absolutely. Well, I remember when I first walked in the office in Chicago, and this comes back to, you always remember your first 5 minutes, that there was a sign hanging above. It said, "Jam the locals." And looking back, I always laugh about that. I didn't know what that meant when I walked in there. I thought most of the people in that trading desk in Chicago were not from Chicago, so maybe we just hate the Chicagoans. And then I realized that this had nothing to do with Chicago. It was just the people in the pit who are constantly trying to front run you and looking for when that phone rings so that they can jump in front of your order, especially if the same phone just rang 3 minutes ago. So to get around this cost of doing business, if you will, we came up with these 6 strategies. And the first one was disguise your flow with code names. So you call up and you're not Steve from Trout, you're Steve from wherever. You make something up. It's not illegal or anything. It's just a code name. And we've set all this up front. But what it was basically doing was, we don't trust the guys down there, especially when things get emotional. They're just going to yell across the pit, buy 50 for Trout. We'd rather have them say, buy 50 for blah, blah, blah. And, at least that would give us a better chance of not being picked off so quickly. That's a basic one, I think. The second one was just to map out the pit. You have to know your pit. So when you're calling in, you have to know where every single broker is located in that pit. You have your buy guys and you'd have your sell guys. So if you're a buyer all day and you put on quite a position, you want to make the buying appear like it's coming from all directions when that phone's picked up. You want the guys in the pit, the locals especially, to build up a frenzy. And if they see buying coming from left, right, center, they're gonna help push that market higher. That's when you're on the offense. And when you're on the defense and you just want to sell, and you do have a big position on, but you don't want to push it lower, you're long, let's say, you want to use one guy, and you just want to try to sneak in 100 lots here and there and try to get it done, maybe all in one call. You just want to be out. But it was crazy down there sometimes in the pit. I remember I called a natural gas broker one time, and And it wasn't the guy I expected. Like I was expecting Mikey and Vinny answers the phone. I said, hey, where's Vinny? And he said, oh, he went out to get a sandwich. So here I was buying with a guy I'd been selling with all day long who worked at a competitor, but he's just answering the other guy's phone. You think about that today, that's crazy. Imagine Morgan Stanley placing Merrill Lynch's orders or, taking orders. So, looking back at it, it was a very inefficient way, but that was how you had to do business back then.
Very, very inefficient, but the most efficient way at the time.
Most efficient way at the time, absolutely, yeah. And then another one was, along with the buy and sell brokers, you just constantly had to be nimble. And the only person I ever seemed to really, back in the day, enjoy handing it back to was Goldman Sachs. They often quoted, they leaned on your bid or your ask. They knew which direction you were going in because you'd been buying or selling with them before, especially in the FX markets. So it was kind of fun to just hand it back to them when the shift changed. And sometimes I'd get a quote like, hey, Steve, you were a buyer all day and you just sold it to me, like he's being helpful or something. And I'd say, well, yeah, but thanks for double checking. It's just some psychology going on in there. Another thing is, and this I think falls in line with Monroe Trout's personality, his persona, and that is we were the opposite of Tudor. Tudor would be in the pit one bid for 1,000. He wanted you to know he's defending a level, and he was a presence in the pit. So we'd call down and we'd say, who's on the bid? Tudor's on the bid. That was the opposite. In fact, sometimes as traders we were jealous because Monroe would have us buying 1,000 lots, 8 lots at a time. Just constantly placing calls all around the pit, and you were playing whack-a-mole after a while with just phones nonstop ringing that you placed orders for. So that would be, situations like that were definitely no food, no bathroom days. That was an interesting thing. Another one was the number sequence method, I called it. You'd call up, you'd buy 50, buy another 50, and then maybe you'd say buy 26. Some crazy number that wasn't really the multiple of anything. And odd numbers are even better. Buy 17 maybe. And then you could hear the relief in the person's voice on the other side, thinking that you're winding down. And then you come right back with buy 100, buy 200, buy 100, buy 300. And the savvy brokers started to realize that you're going to be doing that, so they'd always be ready on your beck and call. I mean, they would listen to every word you said when you were placing orders, and sometimes maybe hanging the phone up and then calling right back, just so you could get these 50 sets of eyes all staring at the phone that you're calling on from the pit to just go away for a second, and then you could come back and place those orders. And finally, I think this is the sixth, the personal touch method. This is something that this is my favorite. This is something I enjoyed using. Everyone has their own style back then, but most of these guys in the pits were regular Joes. They're from Chicago or New York. And, in the U.S., they'd want to talk about their kids when you're trading with the U.S. guys. They'd talk about their girlfriends or wives, family. And then in England, they'd talk about some football match or something. You just wanted to keep the conversation going. And in Asia, where I've spent most of my time trading down into the Hang Seng or the Aussie pits, they'd want to talk about their weekend, or maybe a lot of the Hong Kong brokers were big gamblers on the side, the HKFE. So whatever it was, you'd find that conversation that you'd always go to, and you would just want to stay on the phone. It was like you were queuing up on the phone just in case. You just wanted to hear the noise in the pit and at the same time look at the prices on your screen. And you knew that this thing might run any second, so you want to be first on the phone with this guy, ready to throw your orders in there. So a harmless conversation, about...
Just to keep the lines of communication open.
Just to keep the lines of communication going. Because, if you hang the phone up, you're going to call back, and that phone's just going to have the ring sound going 5 times, and you're like, oh, boy, I just missed it. So job one, calm everybody down. Sometimes you'd call into the pit, and you knew that 50 sets of eyes were looking at you, and you had to calm the guy on the other side of the phone down. It's almost like someone's on a ledge and you just have to calm them down. Say, oh, hey, how's it going? And you'd keep a BS conversation going for a few seconds, maybe 30 seconds, a minute, and then you could hear the sound of the pit calm down, and then you'd hit it again with some more orders. You had to get the orders in there somehow or another. So that was a technique that often worked. And then you just grab every offer you could.
So let me clarify for folks, though. For folks that are out there listening, they really have to keep what you've just said in the last few minutes in historical perspective. Because for most people today, this is not their life today. You're really kind of outlining what you saw early on. And we've had a transition today. This is not what you have to deal with today. This is not the pits today. So why don't you talk about the changes that essentially, pits, except for a lot of, some guys reading newspapers and stuff, and some really cool facilities they built in Chicago. It's really not what it once was. But so what's changed and what's stayed the same now that we're more electronic?
Right. What has stayed the same is price discovery. I still feel big figures are still important, and what was resistance can quickly become support. I'm not a technician or anything, but I'm just saying that happens. It's just an analysis or a reflection. Phantom trades. I think algos are still doing what people used to do. I mean, I used to call out, especially in FX markets, and get a price on 100 million D-marks or euros, and then pass. And I just wanted the broker to know that we might be sniffing around, especially if I had been going one way or another. And there's still trades going on today, not for that kind of size, and it's very labor intensive, but it's not labor intensive for a computer, because a computer never gets tired and it comes to work every day on time. And it's going to put out phantom trades on bids and offers, especially padding the book. And there's really no intention of getting filled at those trades. And if they do accidentally get filled, they quickly need to cover and get ugly in a flash crash type situation, or something where a high frequency trader maybe is leaned too far one way or another. But I believe that still exists. Stops in the market. You used to call down to the pit, and some people did it. I never did it, and the funds I never worked for did it. But they would place these huge stops in the market, and then the brokers talked at the time. Well, now these machines are hunting these stops down. They have ways of smart algorithms of looking for these stops and actually finding alpha in them. So those things, I believe, are all the same. The one thing that, if I were to do the poster child of the transition, it would be the one lot. The one lot means a lot different things today than it did back then. And what I mean is, when I traded a one lot in a pit, I'd call down and say, hey, I felt very apologetic. I need to buy one feeder cattle, blah, blah, blah. And the guy's, okay, sure, Steve, do me a favor. And I kind of felt like I owed him one, You felt bad, like you just watch your mother take out the trash. It's like, oh, God, okay, all right, we'll get you next time. Whereas now, that's the norm. I mean, there's just streams of one lots going through. And I don't know if this collective wisdom is a good idea or not, but because often you can see the flow coming through on the one lots, or the algos can, and it's probably not going to stop for a while. So
now I have to imagine also back during this time period, some of your competitors would have been the very folks that I've helped popularize as well. I mean, there was a lot of trend following players that would have been coming in too, but they obviously would have been approaching the pits and coming in much different ways than perhaps your firm was.
Right. Yep. Another thing that's changed from a trading perspective, which is my perspective, is that we traded 6 markets at once. That's pretty much all a human could do when you were trading them manually, and that was kind of like taking a final exam and doing your taxes at the same time. That was pretty much you're done with 6 markets. That was the number. But now, I mean, I'm watching a lot of markets. I'm watching many stocks, futures, swaps, currencies. I mean, that's what all these screens are for. And you can quickly drill down to problems today, and you can find where you want to manually trade some things. There's always a need for human touch. But and then another thing that's changed is I come from a environment, where there were up to 25 traders on a desk. And where I am now at Two Sigma, we have 450 employees, and I'm one of 7 traders, one of the 7 core traders. We're 24 hours, trading all these markets.
Now, what size capital is Two Sigma right now in terms of assets under management?
A little over 10 billion.
Okay, 10 billion. So a significant stake. So before we get to where you're at right now today and some of your current stuff, I want to, there's a couple things I want to trace still early on your career, because Bermuda, I've not been to Bermuda, fun place to work. And for people that don't know, that haven't done their quick Google Maps or whatnot, it's right out there in the middle of the Atlantic, kind of off the coast of North Carolina, Virginia kind of thing.
Yep.
Somewhere there.
It's 560 miles due east of Hatteras.
Okay.
Yeah, and I didn't know that when I first, it was presented to me in 93. We were moving to Bermuda. Came home and told my wife, we'd been married not even a year, and she said, "Oh, great." And we pulled a map out, and I was looking down near Cuba. But no, I was wrong. It was out in the middle of nowhere in the Atlantic. It was supposed to be 3 years. It ended up being 10 years. And I had all 3 of my kids there. Great place. It's a luxurious island, and it's not. It's probably the cleanest, and I'd say,
there's not a lot of room for riffraff on Bermuda.
No riffraff. Yeah, there's all kinds of signs in the banks about no money laundering, and they're checking everything. You basically feel like you're in any of the states in that regard. And I think even the IRS is connected well through Bermuda.
Yeah, yeah. So, let me get to the most opportune question. So, your first gigs here is working for this well-known trader, Monroe Trout. I'd have to go back and reread New Market Wizards, which I did not do in advance of this interview. So, the biggest thing that I remember about Monroe was, and correct me if I'm wrong here, about 6'10".
He's tall, yeah. He was the captain of the Harvard basketball team. I would say 6'10", yeah. I think that's probably about right.
So 6'9", 6'10". He got a lot of his early training from Victor Niederhofer. Would that be a fair assessment too?
Correct, yeah.
Yeah.
Late 80s, he was working for Victor, and so was Toby, actually, later on.
And I think it's also interesting, and Victor and I have had fun duels over the years, and I think he's a bright guy. He's obviously had some well-known issues in the markets, but I think people don't know this necessarily. His brother has been one of the most successful traders of the last 20 years.
Correct.
I mean, his brother I don't know the size of his fund these days, but his brother has had no shortage of success.
Correct. Yeah, he's in Midtown. He's doing all right for himself.
Yeah. So what can the audience know about what you learned from being around Monroe for all this time? What can they learn?
Yeah, well, Monroe, first of all, he's follows objectivism very closely.
I forgot the Rand connection. I forgot that.
Yeah. Well, he even the clearinghouse he bought from Gerald. He named Rand in Chicago.
I remember that too.
Yeah. So, as far as ethics go, it's all involved in reason and the pursuit of self-interest. We had signs up on the walls. I remember John Galt's quote, can never forget it. "A trader is a man who earns what he gets and does not give or take the undeserved." It was everywhere. And we all started realizing, hey, I think I'm an objectivist too. Now, I say that sort of tongue-in-cheek, but I mean, these things all made sense to us. They're fair. Monroe's a very fair person. His most impressive trait is probably his discipline and his humility. I mean, I think in a perfect world, Monroe would prefer if no one knew who he was. There's no ego. I mean, the name on the door is Tewksbury now, after Matt Tewksbury, who I went to school with at William & Mary. But there's really, he's still in charge. Man behind the curtain. And that gets back to, I think, what I was saying earlier about Tudor in the pit. Nothing against Tudor. I mean, I very much respect Paul Tudor Jones, but Monroe was not the two bid for 1,000. Monroe was the quiet guy who just wanted to buy and sell without anybody knowing about it if possible. And I think that's how he lives his life. Just
for those folks that didn't follow a bit of our conversation right there, So objectivism would be a philosophy put out by Miss Ayn Rand. And if you've not read Fountainhead or not read Atlas Shrugged or some of her other works, that's your fault. And for anybody out there that hears this conversation and immediately says, "Oh, these two guys are talking about their high school philosophy," and I see people try and poo-poo this and she's bad or this or that. Listen, if anybody with an open mind reads the vast majority of what Rand writes, it's common sense. Mm-hmm. It's the common sense that has been beaten out of people that no one wants to admit anymore. And when you read it, you're just like, oh, well, that's really how life really should be. It'd be a much more peaceful world. And so, for all those critics out there that might hear this and want to immediately poo-poo it, go jump in a lake.
Right, exactly. Yeah, exactly. I mean, he only required us, and it wasn't a stiff requirement, but he suggested that we read two things. And one was his thesis paper he wrote at Harvard, Price Movements in a Stock Index Futures Market, which I
have a copy of that.
Do you?
Yes, I do.
Well, that's impressive.
I'm not really sure I ever made much out of it, but I have a copy of it.
Yeah, I've gone through it several times, and I don't think I understand it fully. But
hold on, why was that impressive that I have a copy of that?
Well, I don't know, because a lot of people ask me for a copy of it, and I say, well, why don't you just Google it, which is an easy way of saying, I don't want to send you the copy of it. But
right, because you're not going to find it if you Google it, I don't think.
That probably not. And the second thing is Reminiscences of a Stock Operator, Jesse Livermore.
Right.
And that didn't mean much when I read it, but then I went back and read it and reread it, and it became more and more important. And here's a book written in 1920s, So.
Well, let me ask. So you transition, and the transition was to go work with Crabel Capital. And I mentioned in the introduction, I guess after my first book came out, I picked up the phone one day and I just decided to call like 15 fund managers that were all managing over $1 billion at the time. And I really didn't have any perception as to how I was viewed, but basically they all took my calls except for a couple, and they all said, come meet with me. So this was like, at the time, this was like Toby and Bernard Drury, David Harding, Salem Abraham, all these guys were like, sure, I'll talk with you, da-da-da-da. And so I went down and spent the afternoon with Toby down in the Virgin Islands. I remember he was staying at a really spectacular view, hanging off a cliff.
Right, and, he knows how to live.
Yeah, so it was a really cool spot, and remember we talked a little tennis and whatnot. I think he was a professional tennis player, wasn't he?
Yes, he was. He was ranked, yeah.
Yeah. So how'd you make that transition? I mean, obviously they were both in the same short-term systematic space, so it probably wouldn't have been uncommon for there to be cross currents, but they would have been competitors to some degree.
They were competitors, and I didn't realize that. I had lived so contained in this little world in Bermuda, and there were tax savings in Bermuda and some other things, and it's a pretty place to live. But I think also it was a great place for Monroe to put people so we wouldn't network with anyone. And so, I didn't read articles about the industry. I didn't read about, that kind of thing. I read fund magazines when I was bored, So when I went to Crabel, I then, a lot of light bulbs went on. But the one thing I couldn't believe was that in the short-term space where here we are often knocking heads with Trout, I didn't think it could be so different. There was more mean reversion going on at Crabel and many more different types of trades. Toby wrote a book, Short-Term Price Patterns and Opening Range Breakout, and even that looked different than what I was used to. So here is someone making money in a very similar space, but doing it in a completely different way.
That book, by the way, he gave me a copy of that. That was but I know you can go on Amazon, and if you want to pay whatever it is, $500 or something, that book has become somewhat of a kind of a cult classic, right?
Cult classic, exactly. That's the best way to put it. We often would talk at research meetings about how that what the book was fetching these days on the black market. Joking around. $1,000, $800. I think it was up to $2,500 at one point. So
what did you mentioned some of the philosophical, psychological, maybe some of the trading techniques and some of your upbringing in Monroe Trout's operation. What did Toby do differently philosophically or psychologically? What did you glean differently? What did you learn differently from being with him?
Right. Well, he had a research platform developed in-house, and it was like a really souped-up trade station. So traders were developing their own trades. I remember when I got there, I didn't believe it at first, and in my, like you mentioned earlier, huge contract with all kinds of legal stuff in there, they mentioned developing your own trades. They wanted to make sure you weren't stealing other trades. They wanted you to develop them in-house, and they were the owners of the trades, all things that make sense. But yeah, a lot of the alpha was generated right there from the trading desk. So you would get paid on what you created as well, depending on how that strategy worked out.
Now, well, I can't really tell if there was a dodge in there, or if I just keep keeping you on here. But we mentioned that Monroe had this very specific of, for example, Ayn Rand's work. Was there something about the way, and it's been years since I sat down with Toby, but was there something about him or his philosophical view or working with him that you took away that's affected you today? I'm sure there's many things, but...
Well, yeah, he also had all these Ayn Rand and objectivism books on the shelves.
Okay, well, it was a perfect transition for you.
Perfect transition. I recognized them all. But he also was different in the way that he was willing to try all kinds of new things. There were, completely just, almost like a prop shop mentality back in the year 2005, 2006, some other things that came along. He was definitely willing, a real laissez-faire approach, allowing, not afraid to try new things. And then if they didn't work, he knew when to put an end to it and said, okay, time to move on. So in that way, he was, he always brought fresh ideas to the table. He put me in charge of automating the trading desk besides running the night desk. And so I was the liaison, if you will, between the 25 traders and 8 developers. So we went from paper to a fully automated trading operation from 2004 to about 2010. That was a huge project, but he didn't have a problem putting me in that position. So I put in a lot of hours and enjoyed that project.
You're making me recall part of the conversation I had with him. And in my world, I'm kind of this interloper that's been invited into a lot of different shops and a certain amount of trust built up. But what I've often realized is that a lot of these shops, even though you would expect, and I guess there's, the MFA conferences and stuff, but even though you would expect there's a kind of, inside type thing, I actually found, I remember this with Toby too, they always wanted to pick my mind a little bit to find out what, not that I was going to be able to give away any secret to the shop or some other shop, but it was always kind of like you knew that everyone in this space, even the biggest names, were somewhat isolated, and they wanted to kind of have a little bit of intelligence on the other teams, like, not from a secretive type thing, but just curiosity more. And I always thought that was interesting, that I did not realize that I was actually being exposed to more of these individual traders than perhaps the individual traders are being exposed to their peers, which I thought was interesting.
Yeah. They keep the traders locked up from everyone else.
But even the big guys themselves. Yeah. I mean, I've actually made introductions between guys that you would think would otherwise know each other because they're managing well over $1 billion each, and they don't know each other.
Yes.
So it's an interesting...
the MAR used to come to Bermuda, and I was in the elevator with John Henry and someone else, and I watched this big introduction being made. And of course, I recognized John Henry, but I was like, don't these guys know each other?
Yeah, exactly. It's a very... it's even at the highest levels, I think it's a fair assessment to say it's a solo type thing. This is, you're not... there's not a lot of glitz and glamour unless you kind of make it glitzy and glamour. For example, John Henry, the owner of the Boston Red Sox now, he's made his lifestyle glitzy and glamorous. But for a lot of these guys, even the biggest names, some of the greatest traders, some of the biggest wealth producers, I mean, they're under the radar.
Oh, yeah. Yeah, absolutely. Another thing, I'm not trying to name drop here, but I went to the Robin Hood Foundation. I was at their annual event, and people were, a lot of people I knew and I'd seen in magazines are all just shaking their hands for the first time. And I just couldn't believe that these people didn't know. I thought they all hung out at a country club together or something.
No, they don't, for sure. That's for sure. Well, listen, let me. We could kind of chit chat on all kinds of stuff, but today you're at Two Sigma,
right?
And tell me about the roots of Two Sigma. I'm not familiar with Two Sigma, so tell me about the roots of it and how it was founded and how you ended up there.
Sure. Two Sigma started in 2001, just officially a couple weeks after 9/11, believe it or not. Ex-DE with two founders. One is John Overdeck, ex-DE Shaw. He worked closely with Jeff Bezos to set up Amazon. He moved out to Seattle back years ago. We know how the Jeff Bezos story goes. And then David Siegel, also ex-DE Shaw, tutor, CIO, PhD from MIT. He also founded Farsight Financial, which performed the world's first retail stock trade on the internet. The two of them, they got up together after knowing each other from back in the day at DE Shaw. And they started up a company that's basically a technology company that manages money. It's not really a hedge fund. It's a systematic investor. So that part is familiar from my Trout and Crabel days. But it's multi-asset. We have long-only products. We have a variety of different products. So it's not just strictly per se hedge fund.
Gotcha.
But in addition to that, it's run a lot like a cutting-edge technology firm, like a Google maybe or a Yahoo. I mean, things are moving so quickly. When I was interviewing there just a little over a year ago after Crabel, there was so much hustle and bustle. People just running back and forth. And we have like 4 or 5 buildings in Soho, and everyone looked like they were all running to release the latest version of some software. That's the way it felt. There was a lot of energy. And we have chess tournaments for fun, that kind of thing. It's just it's like a campus environment, I guess. It's always open, people there all the time. So I'm not lonely in the middle of the night.
Do you find the contrast between, let's say, in my world, the trend following world, where you can walk into a large number of trend following shops today and you will see absolutely nothing of what you just described?
Right. Oh, yeah. I saw that on a couple interviews. I flew around the country last summer, and I definitely saw a lot of that. And I've, at points in my career, I've been in that environment, and this is nothing like that. Sometimes, I'm getting ready to go home at 4 a.m, and there's someone still, a researcher, working around me somewhere. And we have, of the 450 employees, I think 300 of them are researchers and technologists from non-finance backgrounds. 80 or more of them have PhDs.
See, I when and I get all kinds of people come through my world, but I don't know how. If anybody says they want to be in the short-term systematic space, they want to be in the quicker moving things and looking at markets during the day and much smaller time increments. How the heck can they compete with Two Sigma?
Yeah.
You can't. You could be a trend follower. You could, if you say I'm going to trade a weekly bar, at least you've got a fighting chance, or a daily bar. But I don't know how you compete. 450 employees, all doing researchers, all PhDs. Come on, there's who can compete with that?
I know. It's funny because I was handed something just in case any of this came up, and I'm reading from something right now that Two Sigma has the computing power that would rank in the world's top 200 supercomputer sites. Right. And this is based on SimFarm computer power information. I have no idea what any of that means. Okay,
so for all you day trading wannabes out there, short-term systematic guys who think you can find an edge and you think you can compete with that, I say, go give your money to them. Give it to them because they're going to take it from you eventually, anyways. Just in the trading world,
right, exactly.
If you're going to go in there and try and fight against that, that's the beast. I will defer to the beast.
Yeah, It's interesting. And then also, how can you compete when you look at the talent that they attract? it's a very fun environment. Your work is your life, which is something that I've known for years. But I mean, I'm the old guy in the room, but I mean, I look around me and these people, they are completely on board, and Two Sigma caters to that lifestyle, food and events, parties, sports, everything. You definitely feel like you're in a college campus.
Interesting. Well, let me switch gears on you as we wrap up, though, because I know you, beyond all the trading and this career in execution, being with these funds, and I hope people have heard something today, because I know I have, that kind of spurred them to get to put a human face on these traders, these funds, this style. But you mentioned early on, writing, English. Playwriting. And I think there is something in your world right now that you are working on that is quite different from being a execution trader on a derivatives desk.
Right. Yes. I wrote a screenplay, Unhedged. I wrote it in 2010. I didn't sleep for a month in January of 2010. I wrote it. I went through 10 drafts. I'd written plays before, but not a screenplay. So I wanted to get up on formatting and various other things. And then it just started winning contests. It won or placed in 15 contests. And the highest has been the final in the Nickel Award, which is like the Olympics of screenwriting. It was in the top 5%. And then I also got invited into UCLA's screenwriting program by the chairman, Lou Hunter himself. That was sort of a goosebumps moment when he asked me in person. And then I got optioned on this script in July. So now we are busy trying to attract directors and actors and financing. But it's called Unhedged. It's a drama feature. And so far we have one relatively known actor attached. So we're pretty excited about that. What else can I say about it?
Is there any part of the story that you can yet reveal?
Oh, yeah. Basically, it has high finance and hedge funds as a backdrop, but it's really a story for everyone. It's about career absorption and essentially the need for a balance between your personal life and your work life. And as I started realizing in my job over the years that my only friends were in this business. I mean, my friends today are traders, researchers, PMs, and analysts. That's it. Facebook has allowed me to get back in touch with friends outside of that world, but including my kids. I mean, I haven't been at all the Little League games and all these events, especially working at night. So I started realizing I was going in one direction. So I wanted to write a fictional story about a couple of guys, an older guy and a younger guy, who are so absorbed in their careers that when they have the rug pulled out from underneath them, they realize that they had nothing else. So it's called Unhedged because in the story, the hedge fund is unhedged, and that brings the hedge fund down. So the analogy being, if you're unhedged in your life, that'll bring you down as well. So got to get your hedge on.
Well, I mean, that's one good explanation. There's been a lot of Wall Street movies out. Is there a major difference, though? I mean, a lot of people, fear, greed, maybe some kind of, cathartic comeback or something
Right.
falls down. What makes this different?
In a nutshell, it was the inciting incident. I wanted to write a story about high finance or with a high finance backdrop that didn't have despicable stereotypes we see like Michael Douglas in Wall Street 1, Ben Affleck in Boiler Room, Leo DiCaprio in what's going to be Wolf of Wall Street coming out next year, Richard Gere in Arbitrage later this month, and Jeremy Irons in Margin Call. And in all these cases, these are despicable people. And in a lot of these cases, fraud is the inciting incident. So I just wanted to write a story where no one's done anything fraudulent. It's just a bad decision and some greed, which, I don't care what business you're in. Those are common elements. And then the victims are the traders and the people who work at this fund. When you think about Lehman Brothers, those people carrying those boxes out of there, which was a strong impression on me back in 2008. Not to mention a lot of friends I had that were invested personally in Bernie Madoff. And, you see that people work very hard and then they have everything taken away from them from a seemingly random situation. And that pretty much speaks to what's going on in the economy today. So I think it would be have a common message.
It's interesting. You mentioned Boiler Room, which I think everyone should watch. But there's a lot of people out there that watch Boiler Room and watch that speech that Affleck gives to the young trainees, if my memory is holding me right. And I don't remember the exact content, but I remember the tone. And there's a lot of people that watch that, and that is their vision of success. I mean, they watch that and they're like, I want that. That's how I can get there.
Yeah, well, you don't have to be an a-hole to be successful.
Yeah.
I mean, that's the bottom line. The movies that affected me are, there's a documentary called Floored, and this creator-director, James Allen Smith, has become a friend of mine. So I highly recommend it. It shows the transition out of the pits. It's got a pretty sad undertone going to it, but it does document a lot of the pits closing. Another movie is Wall Street, for obvious reasons, and The Firm, and as far as the secrecy part of The Firm, not the fraud and not the plot of The Firm, but just the secrecy part of it. The fact that you're so engulfed in your job, they own you. I mean, every company pretty much owns you, but always to be ready and willing to do what you have to do. Another movie is The Trader, Paul Tudor Jones and Peter Borish. Predicting the crash of '87, that always had an influence on me, even though that's more of a documentary. And then the last one being Up in the Air and job loss, in a very cold way. I
don't know if you saw it, but I had a chance between '06 and '09 to do a documentary, and a ton of trend followers appeared in it. A bunch of Nobel Prize guys like Markowitz, Vernon Smith. Jim Rogers. And so when you talk about making a film, not a drama, but I have to say, as a novice walking into the filmmaking process and spending 3 years and over 7 figures on it, I have to say that I've been around the block in that. And I think the only piece of wisdom I could give to doing it is just making sure, as the content guy, that whatever funding it's there and it's all set up, and you get to have the vast majority of control on it. Because if you have to trust too many people in the filmmaking space, not good.
I have your movie on my list to order. Actually, it's broke.
I'll send you a copy. I mean, it was a fun process. I think it was fun for me more to gallivanting around the world and talking to all these different people in the middle of the crisis, but. For me, my simple basic concepts were like, look, you can't trust the system out there. You can trust yourself, and you could develop a plan and a strategy for yourself. But if you're sitting around looking to politicians, if you're looking to typical Wall Street or typical media for solutions, you're going to end up, as you kind of said a second ago, you're going to end up with the rug pulled out at the most inopportune time on you, guaranteed. I can't tell you when or how, but it will happen if you trust the system.
Right. Yes. So. Yes, you are. Absolutely. And while we're on that topic, my producer wanted me to mention that you can find Unhedged on Facebook and Twitter. So please look it up. The story's there, and give me a like.
Absolutely. So is there a website, or is it just it's Unhedged on Twitter, so twitter.com unhedged, or?
I don't know exactly. I think that'll work. And in Facebook, I think if you just type Unhedged, I know that'll work. Okay. And then that'll bring you to Twitter as well through that way.
Well, let me give you one last question here. Is there, we had a lot of different things that we knew we wanted to talk about. Is there anything that I haven't brought up today that you think would be really important to leave people with, or some kind of concluding type thought? Because you've had a really diverse career, seen a lot of things. And for those folks that only like to listen to my stuff because it's, or because of a trend following perspective, I think you bring a much different perspective in terms of the trading. But is there something I might have left out?
I wasn't actually prepared for that question, so I'll just answer it. No, I'll answer it as if we were sitting in a bar and I'm just waxing poetic here. I think when it comes around to trading, you want to be systematic, but you also want to be flexible, and you need to have your situations where you're willing to not make a trade sometimes, or just stay on the sidelines. And I think about the Gulf War. I think about where you saw our tanks rolling through there, and our system, I remember, told us to be short crude oil one day, and that didn't work out so well. That would have been a good day to just say, you know what, maybe the system doesn't know, what everyone is watching on TV right now, because a lot of this is psychology. the old joke back in the pits with the soybeans. The soybeans are rallying, because of the weather in Chicago. But meanwhile, the weather where the actual soybeans are is completely contrary to that weather. So, it just, that kind of thing, to just always be prepared for, Europe right now, there's so many bad news, a lot of bad news coming out of Europe, a lot of crises going on. And I think there's some times where you just, you want to be nimble, and you might want to, in certain crisis type situations, maybe not let your winners run as long as you normally, as the motto says. So be ready to cut some winners sometimes before it quickly turns on you.
It's such sacrilege language for the trend following trader.
It is, and I said it, and it's out of the way, and I can breathe easier.
Well, look. Obviously, there's been you and I know from looking at this industry, guys like Monroe Trout, Toby Crabel, Roy Niederhofer. I've had tremendous success in the short-term systematic space, and then on the flip side, I could run down the list of trend following traders. So I think the thing I always tell people is I think it takes a lot more horsepower to compete with the Monroe, Toby, Roy, and you can get I think there's more of a fighting shot for the independent solo camper in the trend following space. But clearly there's profits on both sides of this equation.
Oh, absolutely. Yeah. There's plenty of different ways to make money, and there's also a lot of ways to lose money. But I think, you have to, it's baby steps. And, with Trout, I didn't start with them when they had billions under management. I saw the progression. And so, you've got to move one step at a time, and you earn your way up, as they say.
Yeah. Well, listen, Steve, I can't keep you. I'm sure we could have made this a 4-hour conversation and really kind of dug into some stuff. And maybe we could connect up at another time, and we can kind of go into some more longer stories, and especially as the film gets closer. I don't know how much you know about this podcast, and frankly, it was an experiment when I started it this year. But the amount of listens just keeps growing and growing and growing. So
I actually saw you had broken a record just recently.
It's very cool. And it's really because of people like yourself, people that are coming on here and sharing their insights and their experiences. People just want to tune in and hear that,
Mm-hmm.
So,
yeah. Well, I'm following you now too.
Well, cool deal. Steve, I appreciate it. We will talk soon, and best of luck with the film and Two Sigma.
Great. Thank you very much, Michael. I appreciate it.
Okay. Take care.
You too.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.